Good afternoon, everyone. My name is Matteo Stefanel, and I'm a managing partner here at Apis Partners. And today we have with us Neil Davidson, who is the executive chairman and one of the co-founders of Coda Payments, as well as Udayan Goyal, who is my partner, managing partner, and co-founder at Apis. Before we start, perhaps I'm going to give another 30 to 60 seconds to any lagger joining the call, as I'm seeing a big number of people coming in just literally over the short introduction. So I'm just going to wait another few seconds and then we're going to kick it off. Okay, I think we've probably got pretty much everyone who was wanting to join. We've got quite a big attendance today. First of all, thank you. Thanks to all the LPs, limited partners, prospective limited partners, friends of the firm that have been following us over the past several years, and who have specifically been following also the story of our investment in Coda. Coda having been one of the both most successful investments we've had over the recent past, and one of the most pleasurable. And as soon as Neil will start introducing the story of Coda, you will see why. It's been a joy to work with Neil and his management team. And it's really been a seminal investment in many ways for us in terms of getting into a very attractive subsector of the payments industry, of seeing a management team as high quality as the team that Neil has put together, working together towards a first partial exit that we've just recently announced. As you probably will recall, we've had a very successful exit for total valuation of the business in excess of $2.1 billion. And this is from an initial investment that we made at a valuation that was approximately, let's call it just under $100 million. So it's been a great success, but more importantly, it's been a great success for the company itself, continuing its growth, maintaining growth in what I would call is a fairly unorthodox manner nowadays. This is a company that literally doubles or more every year, whilst at the same time being tremendously profitable. But before we go into the details, I wanted to ask Neil perhaps to introduce himself, but especially introduce the company. What does Coda do? This is the question that many of our investors always ask us. What does it do?
Sure. Well, thanks very much, Matteo, for that introduction and those flattering words about the company. Coda is a unique business. We exist to help publishers of digital content monetize that content around the world. And on the flip side, to help consumers of digital experiences to access premium digital experiences as easily and as safely as possible. If we look at the first slide, which I prepared for today's session, you'll see an overview on a single slide of what it is that we do. First, our two major constituencies, as I said, the world's largest content publishers. This could be publishers of games, of digital media, other premium digital experiences, and the consumers of that content. We got our start in emerging markets where consumer payment landscapes are fragmented and difficult for publishers to navigate. And so what we have done is we've built a massive platform incorporating more than 350 local payment methods around the world, which customers prefer to use, and have made it possible for publishers to leverage that infrastructure, a single integration, to collect payments from customers all over the world using a payment method that they prefer. So you can probably tell right away that Coda is a very distinctive kind of payments company, even though we've got payments in our name. On the next slide, we try to visualize sort of where we sit within this ecosystem. So within the kind of broader landscape of digital payment firms, we occupy a position that is highly specialized, which is to be the best possible service provider to publishers of games and other forms of digital entertainment. And we'll talk, I think, at some point during this webinar about the kind of size of that market. But suffice to say for the moment that it is a large market where we believe we have lots of headroom and lots of opportunity to grow. So we think that by specializing, we can be kind of best in breed in building solutions for publishers in this ecosystem. And what do those solutions look like? Well, on the next slide, I've listed out our three main services. And at the top, and really the centerpiece of our product suite and our product strategy is actually a platform called Coda Shop. And Coda Shop is a consumer-facing platform. It's a marketplace for digital content where publishers can list individual games, currency that can be used in games, access to digital media subscriptions. You can think of a Netflix subscription, for example, a VPN subscription, any kind of digital service for sale. And that's a marketplace that we have built and that we have cultivated over the last almost 10 years, building an audience of content consumers. Now, what underpins Coda Shop is, as I alluded to before, this massive network of local payment methods. We believe we operate the best network of APMs, of alternative payment methods for digital content in emerging markets globally. And that is all powered by a service that we call Coda Pay. Coda Pay handles every transaction that we process in Coda Shop, but Coda Pay is also available on a standalone basis. So many of our clients will leverage Coda Pay in order to offer that same range of 350 payment methods that we offer to users on Coda Shop to their users on their websites. So that's the part of our business that kind of looks and feels most like a traditional payments offering, although there are a number of ways in which Coda Pay has been specifically designed to meet the unique needs of publishers of digital content. To give just one quick example, tax compliance tends to be an enormous headache for publishers of content globally because they need to register and collect and remit GST, VAT, other kinds of sales taxes everywhere they're distributing their content. So we take on that complexity so that the publisher doesn't have to worry about it. And finally, XShop. So if Coda Pay is taking all of those payment methods that we offer on Coda Shop and making that available to third parties, XShop is the opposite. We take that content catalog that's available on Coda Shop and we make that available to third parties. So if you are a big e-commerce platform in the Philippines, for example, you may wish to offer a range of digital content to your users to drive GMV, to drive customer acquisition. You can take that content catalog from Coda on a fully white label basis and offer it to your users. So, you know, I think it maybe is now a little bit more clear about how distinctive and unique this set of services is because of our focus on distributors of digital entertainment. And I think we can kind of measure one of the ways that we can measure the relevance of these solutions to those publishers is by looking at who we serve. So today we serve about half of the world's largest mobile app publishers by revenue. You can see some of their logos on the left-hand side of their screen, including Tencent, the very largest in the world. We've been enormously successful in building up an audience for Coda Shop, more than 100 million users have transacted with us to date. And as I've already alluded to, we've built what we believe is really a best-in-class network of local payment methods, which is really critical to meeting these consumers where they are and making sure that that they can pay in a way that they feel comfortable.
Yeah, so I think Neil, that's super interesting, and thank you for that introduction. And I think one of the things that I wanted to just highlight, which has been sort of quite interesting, has been how Coda exemplifies some of the main investment themes that we have been developing and have developed as we moved from our first fund generation into our second fund generation. So as many of you know, at least those of you who've been investing with us, our first fund generation was all about backing what we called almost traditional businesses, but who were disrupting the financial services industry in their own unique way. So there was, at that time, there was no clear trend in new models. Some of the incumbents had started to explore digital, and essentially we started to see these reinvention of business models that would either create new markets or indeed would disrupt existing markets and take away customers. Now, as we moved into the second generation, and as you know, the Coda's, as many of you know, Coda's actually in our second fund, we started to center down a number of different themes that were becoming more apparent. And probably the biggest ones were digitization. The world was moving into both digital content and all sorts of digital activities, which then required sort of enabling technologies. But even around commerce and finance, there were two sub-themes that we always talked about, which was commerce enablement, which is enabling commerce, which clearly Coda does. And it does that, as you heard very clearly, through the Coda shop and through the X shop on a white label basis. But embedded finance, which actually is probably one of the key themes that are now becoming very apparent. We talked about it at the first time, I think, in 2015, but it become very apparent for fintech and financial services as a whole. That is, every company is becoming a fintech company, but more importantly, they're embedding these financial solutions into their product, and that's what Coda does so well, I think, through Coda Pay. And in addition to that, it's sort of also starting to play a little bit into something we're now discussing, which is how we move from Web 2.0 to Web 3.0 and the beginning of the metaverse. And I think these solutions, particularly the advent of what we call microfinance solutions, so basically doing small transactions, which
micropayments,
yeah, micropayment transactions, particularly what Coda Pay does so well. Whether you're inside a game and you want to buy, let's say, a sword in the game that you're playing, or indeed you're buying some form of digital content, bite-sized digital content from a publisher, then this does it so well. So all of these themes are really starting to come to play, and this is really where Coda played very much into it. And so I think it's a great illustration for us. And so maybe just with that, I maybe turn it back to you, Neil, and ask you a sort of a question related to that, which is, you talked a little bit about your ecosystem and you talked about the people who are around your ecosystems, but how does your actual business model itself power the ecosystem and almost sort of create the synergies between the different parts of the ecosystem?
Yeah, it's a great question. So I think I find the most useful way to analyze our business is through the lens of network effects, right? This is a business that is governed by very positive network effects, which just means that as we grow one side of our business, we become a more attractive partner to those on the other two sides of our business. So as I showed on the prior slide and again on this slide, there's really three sides to the network that we're building: publishers of digital content, consumers of digital content, and then sort of that ecosystem of payment methods and distribution platforms. And what I think you can imagine quite quickly and quite easily is that is how these kind of positive network effects can propel our growth. For example, as Coda Shop gains more and more users, as more and more users become accustomed to purchasing digital experiences from Codashop.com, that obviously makes Coda a more and more attractive partner for publishers who are looking for new ways to monetize their goods and services. And so I think, to be clear, these kinds of network effect governed businesses are enormously challenging to get off the ground because you have very few users and very few payment methods, and that's a very difficult pitch to make to publishers. And so there was a lot of hard work in the early days of Coda in trying to get this flywheel spinning. But I think kind of now that it is, this gives us momentum and it gives us defensibility, right? You could copy all of Coda's source code and spin up a platform that does exactly what ours does. But you wouldn't really have a business because you wouldn't have these tens of millions of users, these hundreds of publishers, these hundreds of payment methods and distribution platforms that are plugged in.
So yeah, that's super interesting. Maybe just another related question to the ecosystem and the market itself is, one of the things that we've always talked about is the effect of the Epic Games Apple ruling that sort of has affected particularly the distribution side, so the Coda Shop side and how you play in app distribution. Could you just talk about that? Just explain to the audience here a little bit of what that was and why it's interesting to Coda. It'd just be useful to get that in the context of the market.
And Uday, if I can add a contextualization point for our investors, this was one of the points that we discussed the most about, even at the time of the investment. What are the barriers to entry? So prior to the Epic Games Apple ruling, what are the barriers to entry? Why can't somebody replicate? Neil, you partially answered already that, but why wouldn't Apple and Google do it themselves, so to speak, which of course partially they do, but why was the Epic Games Apple ruling, I think, and why did it in many ways carry out our investment rationale as we discussed at the beginning?
Sure. Yeah. So I think to answer that question, it's useful to go back in time quite a long way, because I think you have to understand the rather peculiar economics that govern the distribution of digital content to really understand why Coda has been able to be such a disruptive and rapidly growing player in the space. So, if you go back to the 90s, when I, as a sort of teenager, was consuming games, I would go to the shopping mall and I would buy a package with a CD-ROM inside, and the retailer of that game would command a margin kind of in the neighborhood of 30% of the value of that game. And that margin would obviously pay for the rental of the space and the inventory and the cashier and the marketing and all of that. What happened is, as game distribution started to move from physical retail to digital, is that the economics didn't change. And so when platforms like Steam and PC gaming or the big console manufacturers started to distribute games digitally, they continued to command that 30% margin, even though their true underlying costs of distribution were much, much lower, because it was really just a bit of bandwidth to transmit the files over the internet. And when Apple introduced the App Store, they again sort of followed in the footsteps of these earlier distribution platforms and pegged their fee for app distribution at 30%. And because of the emergence of free-to-play gaming, where you don't pay for the game, you pay for in-game items, the fee transformed from being a distribution fee to a kind of transaction fee, or you can think of it as even a payment processing fee. And of course, when you think of it as a payment processing fee, you recognize that it's grossly disproportionate to the underlying costs of processing that transaction. And so, this is what we saw when we started Coda, was that by and large, creators of digital content were overpaying by orders of magnitude for payments from their users, and as a result, you had really a small number of distribution platforms, basically 6 distribution platforms in gaming, 2 distribution platforms in mobile gaming, that were skimming off a lot of the profit from this industry and distributing it to their shareholders rather than to the shareholders of the creators of that content. And so we saw an opportunity to insert some sort of deflationary economics into this value chain and offer customers something that was a little bit more, offer publishers something that was a little bit more more compelling. And that has become a major portion of our pitch to publishers. We promised them 2 things. We promised them incremental revenues that they wouldn't generate if they didn't work with us, and that those revenues will be collected at a much lower cost than Google or Apple would. Now, that brings us now back to Epic v. Apple. So obviously, there have been a number of challenges to the business practices of the 2 major mobile app distribution platforms, not just in the United States, but also globally. We're seeing those in the courts. A major new piece of legislation has just come out in the EU, designating these players as gatekeepers and subjecting them to a new set of rules that's designed to curb their market power. We've seen legislation out of markets like South Korea, designed largely to do the same thing. Our view is that over time, this ecosystem is going to evolve, much like water flowing downhill, to a world where the cost of these payments to publishers is going down. But it's likely to be the case that will be largely because publishers migrate and users migrate to Coda and other players in our space, rather than necessarily Google and Apple reducing their fees. I mean, the truth of the matter is, if you do the math on the back of a napkin, you realize that both Google and Apple, these are sort of geysers of profitability, that both companies are highly disincentivized to turn off. And I think we see the evidence of that in how hard they fight, whether it's in court cases, whether it is lobbying in Congress or in state legislatures, to fight any regulation or legislation or judicial order that would constrain their business model. And so, I think this creates an incredible opportunity for players like Coda. And I think that over time, judicial, regulatory, and legislative action will likely expand the range of opportunities that we as a business can seize. In this slide, we show the size of the market that we are pursuing, and we put that in the context of our sort of current performance. And I think the slide really speaks for itself. We're really just scratching the surface of a very, very large opportunity. And again, the bulk of the spend in this TAM is currently going through one of those big distribution platforms. And so we do have this fantastic value proposition to offer to publishers to help them retain more of the revenues that they generate.
Neil, you touched on it literally almost nonchalantly. with the slide and answering the question around the Epic Games and Apple, and saying, and this is the TAM. But I'd like everyone who's listening into this webinar to actually take a step back and really take stock of what you just said. This is the TAM. This is the total addressable market that a company like Coda or its competitors, or in general, let's say, well, actually, that's it, your competitors and Coda can address over the next very few years. This is a fast-moving market, and this is a market that by no means need to be or is dominated by Apple and Google, etc. And in fact, I think if you start digging deeper and start talking us through perhaps the markets and the subsegments that you serve and why those have been attractive to you, it will be even clearer to the listeners, not just quite how large the size of the total addressable market is and how defendable and defensible it is from the let's call them incumbents trying to protect those guises of profitability, as you rightly said, but also how, once we look at the market itself on a granular basis, there are so many pockets of really interesting profit generation in this addressable market.
Yeah, absolutely. So maybe just one more comment on this slide. We don't have the gaming depicted on this slide, of which mobile gaming is obviously a subsegment. One of the things that often takes people by surprise when I describe this landscape of digital entertainment spend is that gaming is actually considerably larger than spend on movies and spend on music combined. That it's usually surprising to people of my age and older who spend the bulk of their digital dollars on Netflix and Apple TV and Spotify and those categories of digital spend. But I think younger people do have the intuition, the correct intuition, that it's actually gaming where the bulk of the spend today globally is occurring. And when we start to kind of peel the onion of that spend and figure out kind of where it's growing the fastest, we can kind of cut this in two ways. First, we can look across the three main categories of gaming: mobile, console, and PC. And on the next slide, we've showed how the distribution of spend across these three categories has grown since 2015. And no surprise, mobile is growing much faster than those other older platforms, simply because globally, we now have so many more consumers that have a phone and therefore access to mobile gaming who don't have access to a console or a PC. And so, of course, the fact that Coda very early on decided to focus on mobile gaming, it remains really our core, has been a major tailwind for our growth. And then if we continue to peel the onion and decompose the growth of mobile gaming spend geographically, here again, we see a pretty clear pattern, which is that it's in emerging markets where mobile gaming spend has grown most rapidly. And that's for sort of an obvious reason. We're coming off of low bases. We're coming, out of a world where nobody had a smartphone. And so spend has ramped up incredibly quickly, but also because, again, we don't have a lot of competition from the other categories of gaming, and even from the other categories of digital spend. Consumers in emerging markets, by and large, are still relatively new to the idea of paying for a video streaming subscription or a music streaming subscription. But spend on gaming has been far more kind of natural to these consumers. And so, at Coda, we've been either fortunate or smart to have started to work more than a decade ago in a category of this market that was destined to grow incredibly quickly, over the course of these 10 years, which has been a major contributor to our overall growth. And I think this slide, I think, helps to kind of understand first the historical experience that we've had. So what you can see, this blue line, for example, shows the evolution of our market share in mobile gaming. So what percent of mobile gaming spend did Coda process in Indonesia? That's grown incredibly rapidly over the course of the last 6 years. But what is, I think, really encouraging is that we believe that this historical experience gives us reason to believe that in markets that we've entered more recently, that by sort of executing against the same playbook, we're likely to be able to grow our market share in a similar way. And so you can see in markets that we've entered much less recently, for example, South Asia, the shape of the line is very similar. It simply starts going up a few years later, which is when we entered, in the first instance, India. And so I think this is one of the reasons why our recent recapitalization was so successful, because I think we were able to demonstrate to the incoming investors that there's a lot of headroom in this business, and we've got a playbook that is replicable.
So Neil, I had a related question, which is, obviously you talk about historical segments where you've been, mobile gaming, the gaming market in general. I think it'd be just useful for you to talk a little bit about where your future is, and maybe you can talk about it in the context of some of the new investors that have come on board as part of the transaction we talked about at the beginning. And then just as an aside, there's been an interesting question from the audience, which maybe just put in there, which is quite interesting, which is, the question was, if TAM is only addressable if Apple through the iPhone allows for others like Coda to come in, then why would Apple let others into their TAM? I guess that's related to the regulatory side, but let me throw those two out to you.
Yeah, sure. Maybe I'll answer the question from the audience first, and then talk about future growth. So, Google and Apple very early on made a decision about the rules that they would enforce within their ecosystem, and it started when cross-platform games began to emerge. So a game that you could play both on your phone and on a console and on a PC. And the decision that Google and Apple made was that they were going to extract their tax or their fee on transactions that were made on their platform. And specifically, that meant Google Play or the App Store. And they decided that if a user were going to purchase an in-game item on their PC or on a console, and then consume those items on the mobile platform, that they wouldn't take their cut for those transactions. And that established a very important precedent. And over time, that became codified. And importantly, it evolved to permit transactions that were happening outside of the app. And so what a lot of game publishers do today, and of course what we do on Coda Shop, is we allow customers to purchase, principally in mobile gaming, we're talking about a virtual currency for the game. So if a user is playing Mobile Legends, anything that they might want to buy inside that game, they buy with Mobile Legends Diamonds. They can buy Mobile Legends Diamonds on CodaShop.com. And because that transaction is happening on the web, it's happening outside of the App Store ecosystem. And so Apple doesn't take their cut, and Apple permits publishers to collect payments from users that way, so long as they do not advertise that platform to their users inside the app. So that's the important restriction. And that's why Coda Shop, I'm glad the question was asked, because that's why Coda Shop is so powerful. We've done the heavy lifting of educating customers about Coda Shop in the markets that we serve. So the publishers don't have to do that themselves. They get that built-in audience who knows what Coda Shop is and how it works. which makes migrating customers to a purchase experience that's outside of the app much, much easier. So we recently announced this recapitalization, which includes 3 new investors joining Coda's cap table: Insight Partners, Smash Capital, and the Singapore Sovereign Wealth Fund, GIC. We're incredibly excited to have these new investors as shareholders, as well as continuing all of our existing investors, including APIS, continue to be part of the company on a going forward basis. We see incredible growth opportunities for the business going forward, and I usually think of them. I usually kind of talk about them in 2 buckets. I think the first bucket is if you go back to that flywheel that I was speaking about at the beginning of the webinar. We think there's still a lot of work to do in building up each side of that network. Growing market share by acquiring more users for Coda Shop, continuing to add new titles, continuing to add new territories, continuing to grow geographically, continuing to grow into PC and console gaming and other forms of digital entertainment. So that is all we think. We think that there's just a lot of work to do in continuing to grow our position in each of those 3 sides of our network. And then the second bucket is really sort of around product innovation. We believe we have a number of opportunities, some short-term, some long-term, to introduce new products which serve the 3 sides of our network. One relatively new offering in our product suite is something called Coda Cash, which is a closed loop e-wallet, which customers can use on Coda Shop and eventually on our publishers' sites through Coda Pay. This is designed to be a loyalty engine to reward users who transact repeatedly with us. We operate an esports tournament called Coda Shop Global Series, which is a way of raising awareness for Coda Shop to bring users into our ecosystem. And looking forward, you can imagine lots of interesting opportunities. One that I often highlight is if you ask publishers of games about their biggest pain points, monetization and collecting payments is very high, but actually the very, very highest one is user acquisition. That's the sort of engine of growth for game publishers. And we have tens of millions of not just gamers, but paying gamers on our platforms. And so finding a way to leverage the data that we have amassed on our users and what kind of content they enjoy in order to kind of matchmake users with new titles, new content, to help users find new digital experiences that they enjoy, and critically to help publishers acquire new users who are much more likely to become paying users than they could acquire anywhere else. That to us is a very, very clear opportunity to create more value, both for publishers and for users.
So Neil, you've gone into a great level of depth in terms of the opportunities that are in front of Coda, and why this is still early days, if I can put it like this. It's still a tremendously exciting a place to be in. And in doing so, you touched on the recently announced transaction. If I remember correctly, it was in April. We announced the investment, the entry within the capital structure of these new investors, GIC, Smash, and Insight, of course, as you mentioned. And we remain very proudly and very happily investors in the company with Coda, all the way to, in fact, I think we still remain quite sizable investors in Coda. Looking forward to the next call it corporate event. And so you talked about the future opportunities. Let me ask you about what does the future hold for you and for Coda in terms of NASDAQ versus LSE? Because it's very clear that we're going for a listing. Where do you want to go?
Well, thanks for the question, Matteo. I think, in all seriousness, I think our timing with this most recent transaction was quite good. The markets were beginning to deteriorate as we were finalizing that transaction, and have continued to do so since closing. We've also seen increasing concern among the part of some analysts that we're actually going into at least in the near term, a period of decelerating spend on gaming. There's a view, sort of growing view, that 2022 may be a bit of a slow growth or even a slightly negative growth year for spend on gaming, as inflation bites consumers, and as we have at least rising kind of fears of recession around the world. So our view is that the very near term may be characterized by slower growth. But we continue to be exceptionally confident in the medium and long-term potential of this business. And we continue to be confident that the markets will eventually kind of right themselves and present opportunities for Coda going forward as the needs of our company and shareholders evolve. And so I think we've now got a wonderful opportunity to put our heads back down, continue to make investments that we need to make in order to strengthen the company, improve our value proposition to our partners, and kind of emerge as markets improve, as global conditions improve, having really made the most of the next chapter that is ahead of us. I would kind of harken back to something that you flagged earlier in the conversation, Matteo. Coda has been profitable for a long time. It's really in our DNA to be cash generative, as opposed to relying on regular infusions of fresh capital to finance our growth. And I think as we go into this new world, I think that DNA and that orientation and inclination on the part of our management team is sort of exactly the right one for this environment.
So you talked a bit about quite a few about all the great opportunities and about Coda and everything, but always good to hear from a leader of an organization what keeps you up at night, what worries you about the future, what's going to be where could things be problematic for you, and maybe just throw you two other audience questions that have come in, which are both related to what you talked about earlier. One is, any further thoughts on the metaverse? Does it represent a significant opportunity for you beyond the digital content segment? And then, are you thinking about expanding into non-gaming verticals such as software entertainment and streaming? And how can you leverage your existing ecosystem to scale this vertical?
Yeah, great question. So maybe I'll start at the end. I think we talk a lot about gaming, and gaming is where we got our start, but actually almost 20% of the volumes that we process today are for non-gaming digital content. So that would be video streaming, live video, music streaming, and we anticipate that we will grow in those categories over time, faster than gaming will grow. So we anticipate that over time that mix will change, with gaming actually declining relative to, not in absolute terms, but relative to other categories of digital content. And that's kind of how we think about the metaverse. So, I think we're in this kind of funny moment when the idea of the metaverse, even the word is sort of a little bit of a joke. Nobody quite knows sort of what the metaverse is going to be, what it refers to. But I think if you strip away the hype, and if you strip away the kind of the evangelism that you hear from some people who are promoting the idea of a metaverse, it's undeniable that we are going to have a major kind of platform shift in computing over the course of the next 10 years as we move into some combination of virtual reality and augmented reality. The big tech firms are all making massive investments in bringing these kind of virtual or augmented realities to life. Those will likely initially be inside of gaming, right? Gaming often drives adoption of new technologies, and I think it's very likely that gaming will do so again as this new kind of platform emerges. And I think that means that Coda will be quite well positioned to continue to be relevant over the course of that platform shift. And I think that's true for two reasons. The first is we now know how platform creators try to monetize their investments in creating new platforms. In fact, Meta has been very upfront that it is going to charge commissions that happen within its virtual world at actually sort of an even higher commission rate than Google and Apple charge within their ecosystems. So, I think it's unambiguously the case that there will be a role for Coda to provide that alternative to the platforms for monetization that is fundamentally more aligned with the needs and preferences of both publishers and creators of experiences and consumers of those experiences. And then number two, the good news about gaming powering the shift to new platforms is that it's very likely that many of the early adopters of these new technologies are going to be people who know and transact with Coda already. And so they're likely to bring that relationship with Coda into the metaverse, into these new platforms, into Web3 gaming, and will look to us to provide sort of similar services to them as we have been in more traditional kinds of gaming today. And so, we're broadly quite optimistic about our ability to continue to be relevant as these new platforms emerge, and as a consequence to continue to grow by serving participants on those platforms.
Thank you. That's super clear and super helpful. There is a related question that one of our listeners or audience has put forward, which is over the next 18 months, what headwinds concern you the most, whether it's competition, economic slowdown in companies, markets, upcoming regulatory changes? There's a lot changing out there, and it seems like a lot of that change is accelerating. Is there anything that is keeping you up at night?
Well, certainly we do worry and think a lot about the prospects of a recession, because obviously at the end of the day, our process volume is all end user spend on games and other forms of digital experiences. And so that's something that we monitor quite closely. It matters less to us what happens in the US and Europe. It matters much more to us what happens in emerging markets. So not only are we sort of thinking about risks of recession, but we're also trying to suss out, the degree to which those effects knock on in different geographies in the world. And that's sort of TBD. I think the other geopolitical trend that we think about and worry about a lot is increasing fragmentation globally. I think we're moving out of, I think it's sort of broadly understood that we're moving out of a period of integration across territories, sovereigns, and towards fragmentation. And we're seeing this, the classical example being in sort of supply chains, where companies are trying to consolidate supply chains, maybe reshore production, and that is a challenge for a company that's specialty is helping publishers navigate across borders. That our
Sure.
The key kind of value proposition that we can offer to publishers is helping them to publish content outside of their home market. And so, this, I think, the way that we are confronting this challenge at Coda is to try to make sure that we are localizing our businesses in the various territories that we operate in as much as possible. And what I mean by that is, in every country that we operate in, of course, we're helping global publishers to monetize content from outside of that territory. But we are making an increasing effort to be helpful partners, even to publishers within a given territory, because we do understand that in some markets, in some situations, those publishers are going to be preferenced by regulatory and legislative decisions that protect local publishers or favor local publishers over global ones. And so I think that's kind of one way in which we can respond to that broader secular shift.
You touched on partnership in times of deglobalization, and I can't help but bring up this question from the audience that is about partnership, and it's specifically about a different type of partnership. And I quote, "What was your experience working with APIS over the last few years of the investment?"
Great, I'm glad somebody asked that question. We've considered APIS to be one of our best capital partners in the history of the company. I think there's a number of investors around the world who understand payments and financial services. There's a number of investors around the world who understand emerging markets. But in the Venn diagram, the overlap between those is very, very small. And we were very happy to be introduced to APIS when we were, because we sort of up until that time really hadn't found a partner who had those overlapping expertises, which made them kind of a natural partner for me and our team to serve as thought partners as we're sort of working through different decisions that we were making about our growth and our expansion. I would say that APIS has been a very helpful connector in terms of helping us to get to know partners, other capital providers that might be kind of helpful in our story. And really very happy to kind of roll up their sleeves and help us out when we've got thorny kind of operational issues that need to be resolved. So by and large, it's been a partnership that I think has been really productive along a lot of different dimensions.
Thank you, and I can tell you from our point of view, everything that you said, plus it's been fun. So thank you for being with us for these few years.
So maybe
Now,
be great to, we got a few more minutes left, and I wanted to maybe dig a little bit deeper into these alternative verticals, the additional verticals. You talk about the 20% non-gaming digital content vertical, and obviously that continues to be an interesting area of growth. I think there are a lot of people in the market who say that now that we've come out of the pandemic, digital content, and you touched on this a little bit in terms of the market sizing, let's say, of where the gaming market's going to be over the course of the year. And then, we read a lot in the press about Netflix and some of the woes that Netflix is going through on the streaming side. It's just great to hear your point of view of where you see the overall digital content market going in this context. And then
yeah, absolutely. So first, with respect to COVID, I think now that we can kind of look at that experience in the rearview mirror, I think it has become clear that there was a pull forward of growth in spend on gaming that was caused by, not by COVID, but by the sort of lockdowns associated with COVID. People had time on their hands, particularly in developed markets. A policy of stimulus meant that people also had money in their pockets, and so we did see a pull forward of growth that probably, if you look at kind of the forecasts that the analysts would have made about global spend on games prior to the pandemic, those are all kind of handily exceeded, I think, because of that combination of factors. Now, what I don't think is reasonable to expect is a kind of recession in spend on digital entertainment broadly, or digital entertainment, or gaming more specifically. But I do think that we'll see the sort of natural result of a pull forward of growth is that growth in the next year or two may be slower, and I think that's fine. I mean, if you think back to that kind of market size slide that we showed a few minutes ago, we've got so much growth, we've got so much share to take, that it's not really a pressing concern for us that the overall market might be growing a little bit more slowly over the next year or two. I think that's a headwind that we can kind of comfortably manage. Netflix,
nice position to be in.
yeah, no, that's right. And I think that the Netflix case speaks to a completely different dynamic. It's not really about a decline in consumer spend on digital entertainment. I think that the transition of spend from traditional cable to streaming services is sort of well underway. I think that is a more idiosyncratic story related specifically to Netflix. I think that the story that Netflix had told to shareholders around the world was that basically someday everybody was going to have a Netflix subscription, and they would be able to very easily continue raising the prices of those subscriptions on consumers, and nobody would notice, while their cost base grew more slowly. And so that's a pretty incredible equity story, and investors responded really well to that equity story. But I think it was in April when they announced their first quarter earnings. What we saw was that subscriber growth had gone into reverse, and Netflix was very clear about that. That was what was driving that was there's a lot of other great streaming services in the US, and people were, canceling their Netflix subscription and spending that money on Disney Plus or Apple TV or another service which just had better content. And so I think the hit to the Netflix stock price was more of coming to terms with the fact that Netflix business model and growth story had maybe been a little bit oversold. And, you know, when you revise your expectations from a company that's growing subscribers forever to one that's actually kind of stagnating in subscriber growth, obviously that's going to have a massive impact on your expectations of future cash flow. So that's kind of what we think happened with Netflix.
Great, thanks for the answer. So I think we're on the top of the hour.
Fantastic. Well, Neil, first of all, thank you again. Thank you for being here today, but also thank you for being a partner for the last several years. It's been a fantastic ride, and it's not over. It's going to continue until we get to the final answer to my question between, you know, Nasdaq or LSE. So thank you so much. Thank you, Neil.
Thanks for having me.
Thank you.
Thank you. Thanks, everyone. Bye-bye.